Hello, everybody. My name's Julian Costley, and I'm going to spend a few minutes today talking to you about how I approach angel investing, starting from the beginning of the process when somebody would approach me and running all the way through to me making a decision, either positive or negative. So I want to start the story for you today. Those of you who went through the young enough, uh, or old enough, I should say, to have gone through the dot-com bubble around 2000 will know that there was a massive tech bubble and it reached the peak in January 2000, I believe, was the peak, as you can see on the chart. We created a stockbroking company called E-Trade, a spin-off from the NASDAQ-listed E-Trade in Palo Alto, California. We spent 18 months building the company and actually launched only 6 months before we went live, before the dot-com boom. And the company was E-Trade, and we were made an offer to sell the company just then in January 2000. And we sold on a valuation of $232 million. And that was how I got into angel investing, because both me and my senior management team made quite a lot of money. So I started angel investing all that time ago, 20 years ago. And I've gone into all sorts of companies over that period, and I can't really give you any particular guidance as to the best sectors or companies to go into, because there are fantastic opportunities in pretty every sector. I think if there's one thing that runs through the whole lot, there is a tech element to all of it, very often a content part, and very often consumer marketing, because I really love, and I've got my head around digital consumer marketing. So right at the beginning of the process, if somebody approaches me, these are things that I'm not even talking about the business at this stage. It's just what I want out of being an angel investor, and I apply this every time somebody approaches me with an opportunity. I made an impact in my career as an entrepreneur, and I want to keep making an impact, not necessarily now as a CEO, but as an angel investor. Obviously, I want to make a return. Sometimes, but not always, I want to have fees, whether I'm a chairman or a non-exec director. It's really important to me, a sense of feeling of worth, a valued contribution, building up a lifetime of experience in business and being able to be recognized for that and appreciated for it. And I like keeping my know-how up to date. There's nothing better than investing in a range of companies in a similar sort of field and getting incredible know-how and feedback. There is an element of giving back to the next generation of entrepreneurs. And there's certainly an element of energy. I spend hours with entrepreneurs and I come back sort of more invigorated perhaps than they are. And I've met some wonderful, fascinating people, and many, many of them have become friends. So that's my personal objective. I sort of start with this, and it looks like I'm a grumpy old man, and I promise you I'm not. But I do start from the message to the entrepreneurs of saying, I'm really busy and I've got my own priorities. I don't know you, of course. I don't know anything about your company, and I'm inclined to be a bit challenging because I may know your sector very well. And you've got to answer the question why I should be interested in you. So I put up that little bit of barrier. Now, really good entrepreneurs and the ones that have been most successful do have this skill. They're very good at storytelling. And what they do is take me from this disconnected position that I'm in, all the way on a journey to winning my engagement. And I think that's a completely reasonable thing that you should ask of anyone trying to pitch for you for funding. So, after they've won my engagement, I can say, okay, I understand what you do. This looks interesting. You look a pretty credible team. You've taken the trouble to reach out to me. I'm prepared to invest a bit more of my time to find out more. And I'm happy to talk to you, to meet you. And even if this one is not for me, I'll be able to, give it to somebody else. So if I get to that stage, I then have a quick test. And my key thing is whether the idea, even before I looked at the business and the financials and anything, is the idea creative, innovative, disruptive, and does it demonstrate insight? Then I think, okay, yep, interesting, but can I add any value? Is it in biotechnology? Yes, I can't possibly help. So I'm not sure I want to go any further if I don't think I can add value. Do I like the team? Do I trust them? Is this got a reasonable chance of being successful? And even if I did get involved, this is something I'd be proud of to be engaged with, and because the angel investor needs to be as passionate, I do believe, as the entrepreneur. And finally, funnily enough, right at the end of my quick test is whether I'm ever going to make any money from it. Now, I would then move into a macro sector review. So I would then have a look, excuse me, I would have a look at the industry that these people are in, and I would look at the industry risk. Is somebody involved in, for example, 4G technology, which is going to become redundant with 5G or whatever the issue might be. And I've got a lot of stuff that I have a look at and access to databases and things where I know to go to have a quick check. It's just a sense check, really, on the system. Next level is really the critical stuff that I would suggest any angel investor has as a checklist. So the first thing is, what's the problem or the market pain? Sort of what isn't being done now in the market that these people think there is a problem, and it's a problem for a lot of people. So a business that solves a problem, but the market size is relatively small, is not going to be very attractive to an investor. How can it be fixed? And what's the plan for the entrepreneur to fix it? Next stage is, yeah, all that sounds great, but what could go wrong? What's the competition? What's the sustainability? What are the challenges to success? Next will come, how will it make money and how much? So that's when you get into the business plan. And a key part here, just going back, what's the evidence or traction? Where have they got? Have they got any sales already? And even if all of that is good, they may not be the best team to execute it. So what are the team's skills? What experience have they got? Why do they think they can do it? And then as we marketeers say, what's the call to action? And what do you want me to do? And there's so many entrepreneurs think that merely by pitching, that's the end of it. And they don't realize that this is selling. And they really need to convince you that and make it easy for you to be engaged with them and call to action and go to the next stage, which is what happens next. Okay, so we've got to that level. Sometimes you get superb information like this from entrepreneurs for financial due diligence. That column of pie charts, for example, is the changing product mix over the first 3 years of the company, cash flow, and whatever. But the critical thing, the single critical thing that you have to look at, I would suggest, and I look at, is cash flow. So in this example here, you can see that this particular company pitching to me has maximum negative cash flow of 148,000 a month selling, where the yellow is. And if they haven't done it, I created what I call a driver page where I would pull together the revenue cost of sales, OPEX and CAPEX, as you can see at the top. And I set them all to zero. Sorry, I set them all to 100%. And that's the plan that they're presenting. What I then do is vary it a little bit. So I might drop the revenue to 80%, to increase the cost of sales to 110. And you can see what it's done to the cash flow. Pretty well added 100,000. It's gone up to 245 from, if you remember, 148, another 100,000. Now, if they were only looking for 150 before, chances are they're going to go bust if they don't hit those targets. And it's the quickest way, of course, that companies go out of business. It's not because of litigation, it's nearly always because of cash. So the next little question I'll throw at them is, what are the milestones? So you're raising this capital now. What will you look like when you get to Series A or whatever? So tell me some of the statistics. And it could be we've taken 10% of the market share. It could be we've reached 3 million turnover. It could be we've got 10,000 paying subscribers, whatever it would be. It's really important at the outset to ask people what ask the entrepreneurs what their next stage is going to be, because that's going to tell you as the investor where the next funding and therefore the next dilution is coming in. Always want to look at the cap table. How have they shared it out? Sometimes they'll have given too much equity away to not particularly senior people in the team. And very often they've started an option scheme with ridiculous dilution, which is really not in the interest. So it's good to see who the other shareholders are anyway. And that's an essential checklist that you need to do. Any problems you should know about? Perfectly reasonable to ask them at a fairly early stage, sort of what's going on? Have you got any problems? Have you just lost a member of staff, or that option scheme that I've mentioned, is that unnecessarily complicated? Next, I want to know, what am I investing in? I don't want to invest in a subsidiary. I always want to invest at the holding company or top co level, because those are the companies, that's the position rather, that tends to hold the intellectual property. And the subsidiary may never get sold. The holding company could sell and the subsidiary gets hived off, and you're parked out and hung out to dry, I think the expression is. So it's pretty important to know where you are fitting into it. And you get so many situations where there's a great American parent and they're asking you to invest in the European subsidiary, but actually all the software, technology, and everything resides with the parent company. It's a very common problem. Then getting close to the end now, some key questions I ask, and they're all personal ones just before a decision. Remind me again why you want me. Sort of how much money, I know you're raising, let's say, 200,000 euro or Danish kroner, whatever, and how much do you want from me? What percentage of the funding are you expecting from me? And just tell me in maths, really simple. Am I going to get a 10 times return, 15 times? I'll have done that maths already myself, but I want to know directly from them. How are you managing the risk for me? And tell me why I would, why would I find this fun? Why would I want to get involved in it? Whole section here about the deal, and obviously I haven't got time today to run you through all of that, but that's obviously to do with what valuation, pre-money valuation, is being assigned to the company, and fairly obviously you then take the money I'm putting in, and I'll then see post funding what my equity share is going to be. I tend to want to have a minimum of 5 to 10% of the company, partly to do with shareholder control, but mostly to do with the fact that you can't be involved in too many companies at the same time, and you want to have a material share of the business that there. A lot of haggling, a lot of deal structuring. Is it convertible debt? Are you getting a warrant with every share, or one option with every 3 shares invested? Lots to do there. And the best way to do that, nearly always, is to ask who else is planning to invest, and then work together as a group to come up with a consensus on valuation. And then one of you incoming investors then work with the company to negotiate a fair price, and therefore a fair share of the equity for all the funding you're putting in. And then the final checks. I have to say, I've made some terrible mistakes by investing in other countries, and never again will I not understand domestic law, a particular one in the Netherlands, but too short a time to talk about it. Shareholders agreement, does it give me adequate protection? If I'm not going on the board, then who is? Who's going to represent my interests? How draconian, or rather not draconian, how comprehensive and relevant is the management reporting you're going to give after we've all invested? And if you want my help, how much help are you actually expecting to be realistic? A day a month, or maybe a couple of days a month for the first 2 or 3 months until you get going. And then a final check on a personal thing. What do you want me to be? I mean, do you want me to be the chairman, director, consultant? You planning to pay me? Should I expect a little basket of options anyway, just for being involved in the company? And what are my fiduciary risks, my responsibilities as a director? And that comes back to investing in other countries. I know, obviously, entirely responsibilities in a UK environment, but I'm not so familiar, for example, definitely in Denmark, but pretty well any other country other than the UK. Final couple of slides. Closing. Don't get bumped into investing or making a decision on their timescale. If they say we're closing 2 weeks on Monday, are you in or out? Blah blah blah. Then walk away if you're not ready to make the investment. I've made a good investment by trusting another investor who says, no, 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 it's good. Let's go with it and let's stick with their closing date. But I have been encouraged, and this is another cautionary thing. I call this the trains leaving the station. Do you want to be on board? And it's very, if you're excited about a company and you like the management and everything's lined up, you are inclined to sort of go with it because it's fun. But if you're not ready, it's another repeat again. If you're not ready, then please don't go with the deal. Let the train go. There are hundreds of other trains that are going to be coming along, and you can go for those ones as well. No, I'm not going to be able to online take any questions, but what I can point out, if it's helpful, I've got a public Dropbox, and this is the tiny URL to it. And just over the years, when I come across interesting articles, research, whatever, I drop them in and I make it publicly available to anybody who would like to use it. You're welcome to take anything from the Dropbox and copy it or use them in your own presentations or whatever you like. So that's the end of my talk, and I hope it's been useful, and I hope to see you again. Thanks very much.